He did, mate. All right.
How you doing, guys? Just wait another minute or so. See if anybody else wants to come. Can you hear me okay? Can you see my screen okay?
Yeah.
I don't really know what sort of level you guys are at, or where you want me to start, or what you want me to cover. Is there some stuff that you understand more of, or some things that you don't understand at all? So I'm more than happy to go over it. And please don't be shy, because I used to, and it really did affect me. It's just held me back, basically.
Yeah, I'm just starting out, Jason, but I'm just jumping on any lives I can just to try and build some knowledge and experience.
Okay, cool. How long have you been looking at bankers?
Probably say about 3 weeks.
Okay. Were you doing HFX before?
Yeah,
Yeah.
I was. Yeah, I didn't really get to grips with it, if I'm honest.
Okay, with HFX.
Yeah.
Yeah. A lot of people.
I understood it, and I think I got a bit. You call it itchy finger, trigger happy.
Yeah. I was. Yeah, I say it all the time. It's I'm not pointing the finger at all, but it's purely built for Sean, the way he thinks, the way he, his brain. He built that indicator. So yeah, like you say, you understood it, and I did as well. I think we all understand it. The hardest part is when to get in, and when you do get in, like you say, you're bloody putting 6, 7, 10 trades on. I think when it goes the opposite way, you're thinking, oh, it's going to go back up, you start putting more on, all of a sudden you got like 14 trades on. So yeah, I definitely didn't like the 1 minute. So I used to do that a lot on the 5 minute. I had good success with that, but I'm quite a chilled guy, so it was put me fucking in a bad mood. I was losing, I was all the time like on the edge of my seat, like it was really tense trading, I thought. Whereas with the Forex, obviously the risk to reward is 100 times better.
Yeah, I mean the risk to the reward. I mean, you can sort of win. If you lose one, you've got to win 2 back.
Yeah,
so it's like break even and tricky.
I was watching somebody early on. His risk reward was 172 to 1.
Serious.
Yeah, that's quite rare, to be fair, but yeah, it is good. Was there anything you don't understand fully, or?
I mean, I tried to jump on. I saw you on it yesterday, Ben Lofty. He did a sort of a markup.
Yeah.
I jumped on for that for 5 minutes. And I had to leave because I just didn't have a clue. And I walked away from it, just more confused, to be honest.
Yeah, I mean,
and no disrespect to Ben. Obviously, he's trying to help people out.
Yeah.
We're all trying to learn together. But I just looked at it and I was like, I don't get this.
Yeah, and I think you're putting yourself in a worse situation if you understand it fully, because you're thinking, what the fuck this guy's trying to shit about. You're just confused more. Like you say, it's if you don't understand, it's a bit like getting a 14-year-old to jump in a car for the first drive. Like, what do I do?
Yeah.
Well, these days I'm sure they all know how to drive. They're already driving cars. But yeah, it's if you don't understand it, you're a bit like, well, what am I looking for? Obviously, his level will be different to your level. I'll be different to other people's levels. But what I'll do is, I'll just start quite basic then from the start. Sorry, bear with me. Yeah, so do you understand the concept? Because that's what I used to struggle quite a fair bit with. What is the concept behind it? What the banks are trying to do? Do you understand the actual strategy?
Yeah.
Okay. What about Lance and Luke? I know Marvin, you're quite okay.
Yeah, I'm gonna get it. They're obviously their whole point of obviously they're pushing the price right up by buying, and they've got certain areas where they've got the cash stored and they need to get back to them areas to get it back.
Yeah.
Like liquidity and stuff. I think my biggest thing is obviously you look at these videos on especially on IM, and I think there's that guide 4 on the Facebook page, and just everything you watch is such a perfect setup.
Yeah.
And then in real life, it's suppose it's like I'm a heating engineer. Obviously, you go and learn in college. It's all a perfect setup in a nice little bay. But when you actually get out there in the real world, it's nothing like that.
Of course.
And it's so I think that's the biggest struggle for me is I'm looking for these things, but reality is they're not going to be there.
Yeah. To be fair,
it's just where you look for and where you're setting things up.
Yeah. To be fair, they are quite hard to find, but as soon as you train the eye to find it,
yeah,
see it then. But yeah, it is hard to find it. So even such things like this. So what we do have is just tiny, even though it's just one wick. If people, Joe Blogs, general retail traders, we call them, will be selling from just this area. Their stop loss will be above the previous high. Yeah, it's on a smaller time frame, but we'll just stick like this for now. So what the banks are doing is letting people get in, yeah, and then obviously they're allowing them to go into profit, and then take them out. It's easy. So here, so that's the liquidity grab. It's not the best example. So let me try and find you another one. There you go. That's a good one. So what the banks have done, and this is why support and resistant trading works, but only to a certain extent, because we can see here what the banks are doing is that they are setting, pinpoints. That's pretty much you'd say there, because on the support and resistance, what they do is they just trade off zones. Yeah, so that the whole zone will be pretty much a support for people. So the general Joe Blogs will just be buying from here, buy up, and they think, oh yeah, great, I'm in profit here. I'm in a good trade. So taking up to here, their stop loss goes below this previous low here. Send this to the back. Yeah. So, and this used to be me. I was like, oh, great, fantastic. I'm in profit. Yeah, fantastic. I'm up here. Let's 60 quid in profit. Comes back down. Yeah, and by then, most probably, I've moved my stop loss to stop profit, so it'll take me out anyway. I re-enter. I think, oh yeah, I'm Billy Big Bollocks making loads of money. I've just got a fucking another trade now. Yeah, it does the same again, and you start to get frustrated. But you don't understand what the banks are trying to do, because I didn't, unless you come into it and you're told from day one really what the banks are trying to do. I used to trade a lot of trend lines for about 4 to 5 months, maybe longer. So it was very, very frustrating for me. So when this did happen, such as this, so I was in a buy here, for example, the bank would say, thanks very much, fuck you, that's the FU candle, fuck you, take all these stop losses out and then push up. But what it has done is it's mitigated out of here. So it works both ways. So if we were just saying, let's say, entering here, yeah, the dark gray is my stop loss. Where does the stop loss go? Above the previous high. We're targeting, let's say, I don't know, down there somewhere. Yeah, so here we can see we're in profit. Yeah, so if we entered here, let's say here, it came up and took us out first and then dropped. Yeah, so this was a perfect example. Like I say, when I used to trade, I used to enter around this area, pretty much having no clue what I was doing. I thought, oh yeah, it's dropping. Oh, I was on a pullback, because we all know market moves up, pulls back, moves up, pulls back, or opposite. So I thought, yeah, great, this is on a pullback. I'll enter here around this area, then bam, see you later. Yeah, the banks know retail traders will have their stop losses above this previous high. And all they do is adjust enough to push it and then drop the way he wanted to go. And that was making it even more frustrating because I'm thinking, well, for fuck's sakes, that was the way I wanted it to go. It's took me out for some reason, and then it has gone the way I wanted it to go. So it's very, very frustrating. And I've, you know, that's why I've bloody blown eight accounts in total. But yeah, retail trade, I marked something out early on. Let's try and find it. Retail traders used to trade with, let's say, for example, let's go here. So with trend trading, you need typically 3 touches before it's confirmed. So don't mind just above 1, 2, 3 touches. And this is very boring, but you need to understand what the banks see and what. So typically, we would be entering here as a retail trader. So a retail trader is pretty much your average Joe Blogs that's got no idea pretty much what he's doing or learn the very, very basics of YouTube. So pretty much the previous high. Some people may go above there if they understand what they're trying to do. So we're looking to sell. What happens again? Let's mark that out. Yeah, our stop loss is here. What's happened? There you go. Bang. See you later. That's the banks. It's literally, that's all it needs. Because remember that plus spread, in theory, will be taking you up to here. So that's more than taking you out of the trade. So that's literally all trend trading is. Yeah, you confirm a trend with a line. Obviously, it's pushing downwards. So the way the trade is going, the market is going, pushing down. So as soon as we get 1 to 3rd touch, confirmed touch on our trend line, we could take the trade. Yes, you could earn, what's that? 120 pips. Yeah, it's okay. You could live off it maybe, but if you were greedy like I was, thinking, oh yeah, leave it run. Obviously, I wanted it to come all the way down here, so we're just pretty much all greedy. And then what it does, obviously, it comes back up, retests that area. So now it's turned into a resistance zone. And what it's really done is come into this zone here. So see this last up before the down move, come into that zone. And a lot of people, unfortunately, overthink this as well and think, well, it's not quite come into my area, yeah, because this is just shy. And people will actually not take a trade because it's not fully come into that area, has it? No, I don't think so. Well, it has done, but because we're all taught that the body is the most important part. It is, but the wick is still valid as well. So this, in theory, really has come into the wick. It's still part of the body, because if you chop it down to a smaller time frame, there'll be a body in there somewhere. Yeah, but that's obviously a prime example of taking retail traders out. Yeah, they're just looking for that 1, 2, 3 sell away, and then there you go, bang. That's a perfect example of the banks pushing it down the way, antagonizing people in, getting all the retail traders, billions of people in, and then push it up. Yeah, and then obviously what they're trying to do is mitigate out of this candle here, because that is the last up before the down move. So when we look for the last up or the last down move, what we're mainly looking for is who's the bad boy, basically. Yeah, which candle is the naughty boy in the school. So in the classroom, we've also got this one up here. Yeah, so what we are typically looking for as well is which candle and that move broke structure. Okay, so this one is 1, so that pushed up, and then what happened here was it broke this structure here. Yeah, so that's just a more probable candle to use, because I know a lot of people struggle with, well, which candle do we go off? Do we go off this one? Do we go off this one? And it's pretty much with smart money, it's never 6, 10, 12, 15 candles. It's always either that one or that one. Yeah, it's all, I'd say 99% of the time, it's just 2 candles. You just have to choose which one is which. And that is why risk management is important, but it's also in your favor, because let's say we are trying to take this one, which did look like it worked out. Yeah, let's put our stop loss above that high. Let's say, for example, we even just targeted these lows down here. So that's given us a nearly a 6-to-1 risk to reward ratio. Okay, but if we did lose that and the price was here and wanted to come up to this one, obviously we lost 1%. Yeah, that's gone. So you've lost that. Not an issue, because in theory, what it is doing is getting us a better price. Yeah, so just imagine if you're going in to a clothing shop or whatever. I'm sure you've all been with your missus. We all love a fucking bargains. So do you want 30% off, or do you want 67% off? And that's exactly what the fib levels are. Yeah, so if we go from the high to the low, look at that, surprise, surprise, it lines up with the 89%. So would you rather 89% off your holiday or your car or your pair of trainers, or would you like to go off 61%? So this is why mine are in orange or golden. That's my golden spot. A lot of people don't know about it's rounded off, so it's the 88.6, and that's the 78.6. Yeah, that's right. But that's been rounded off. So yeah, that's your 88.6. So where would you prefer to get in at? Yeah, so it looks like it's come actually up here. So in theory, this one here did work out. Yeah, if we went to our lows, it would have smashed it all day long. Yeah, but just for this example, if it didn't work and came back up 1%, what do we have from up here? We're getting a better, I don't know what you call it, more value for your money, I guess. Yeah, so the risk looks like the same. It's 24,500, 26 pips, 25 pips. Yeah, so they're pretty much the same risk. Yes, you're risking 26 pips here and risking 25 pips. It's not great, but until you're very, 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 very confident, you know, that's the sort of pips sometimes I play with, 3, 4, 5 pips, but it's, you know, I do get losses with that, more so because I don't give it enough breathing space, basically. But let's say we went off that, and now we're targeting them lows. We've now got an 8.5 to 1 rather than a 6 to 1. Yeah, so if we then went up to the 2 hour time frame, what else can we see? We've got these lows that need to be taken out. Yeah, so there's a very, very good chance. Obviously, there's liquidity sat there. We all know that, and look what's happened. It has taken it out on the first run. Don't get me wrong, but if this was to push down even to them lows, we're now looking at a 12 to 1. It looks like it's done its move. It's taken them out. So this would be typically a signature move. Yeah. So what it has done is it's taken them lows out over here. And then now you could have taken that trade. There's nothing wrong with that. But what it did do in the process was, let's zoom in a bit more. It also created liquidity above here. Look. Yeah, and what's happened is this has taken all that liquidity out. So it's very, very important to look at the higher time frames. Yeah, I very rarely now trade off the smaller. I don't even look at the small time frames, only for entry purposes only. Yeah, because the overall, and this is again, this is something I used to struggle with massively because I wanted to be greedy and I wanted to get in all the pips, yeah, as many trades as possible. But I did 6, 9, 7, 7, just shy of 9,000 last week, and I only took 3 trades. I did double up on a lot of them, stacking. Yeah, so you're taking more than 1 trade on each sort of pair. But one was on demo, one was on real accounts. But yeah, you don't need to be taking 40, 50 trades a week. Yeah, just wait for the big moves. So I would always typically, so if I get my rules up, so number 1 would be always check what's going on with the on the monthly. I don't really go at all, to be honest. On the weekly, so it's a bit like number 10. I've got sat nav. So when you leave the house, you need to know where you're going. Okay, so it's the same in trading. Yeah, and it's very important not to, like I say, not to just. It's okay. It depends how aggressive of a trader you are. Yeah, if you want to catch like 6 trades in here, and if they're there and they're working out for you, then great, take them. But you know, I'd rather work. You'll never beat the banks, but I'd rather try and work alongside them than, you know, try and beat them, to be fair. and understand what they're trying to do, because all they care about is the higher time frames. Yeah, they want to get from point A to point B as fast as possible, but they also want to do it on purpose and in a clever way by taking people out. Yeah, so I always sort of start on the weekly, typically on a Sunday, even a Monday. I don't trade Mondays anymore, whereas I used to, because now I'm playing with sort of bigger lot sizes. I only trade on a Tuesday, Wednesday, maybe Thursday, but definitely no Monday or no Friday. So you just need to start breaking it down. What's the overall aim for the banks? Yeah, what they're trying to do. So even on the weekly, look at the size of that imbalance there. Yeah, it's huge. So just mark these things out. Yeah, I understand obviously within the smaller time frames that it may be full, but on the weekly, it will be need to be filled. At what point we really don't know. Yeah, that's the unfortunate part. So just remember, every time you see a last up before the down move, has it been popped? Yeah, that's the rule of thumb you need to think of. This has perfectly been popped. If you put a line there, let me zoom in for you. Literally to the T, can't get any better than that. So imagine this is your needle and these are your balloons. Okay, so that's your last up before the down move. They came back up to mitigate perfectly. It's been popped. Therefore, this is not valid. So where's the next one? Up here. Yeah, what is this IPA protecting? Yeah, so with IPA, if you don't know what your IPA is imbalance. So improper price action. So always with imbalance is protecting something, I would say 95% of the time. What's it protecting? This little noggin up here. It doesn't matter what size the candle is. If there's money there, there's money there. The banks will get up there, yeah, or down there.
So then, so that we're looking at the bottom of the last sell candle or buy candle there. Was it sell? No, it's a sell candle, isn't it? So looking at the bottom of that to the next, just so I know exactly what we're looking at there.
So yeah,
So
the candle we're looking at would be this tiny little hollow one here.
Yeah.
Yeah, that's your, let me turn this off. There you go, that's your up candle. Okay, so let's just mark it out. Yeah, and I would put my alarm. Sometimes you do get a rejection of the 50% of the IPA, but if we marked out, let's go, is that the fib? Yeah. If you marked out 50% of, let's say the fib, 50%, delete that. Now, if you start dropping down different time frames, we'll start the 29th of September. So that's the daily, see what's on the 29th of September. 29th of September. Look what's there. That's a remorse candle, and Ben was going on about it yesterday, but he didn't know what it was. So that is a remorse candle. Basically, what it is when price has not rejected from that area, it will come back in a different sort of way. So here, what this did was pushed up, pushed back down, and obviously it's dropped. That's fine. Yeah, this though has left a mark here, whereas it did break sort of structure up to, because this, remember, is on a daily. If we dropped it down to different time frames, this would have been typically break of structure in this area here. Okay, so typically what you usually see is if it doesn't work out like this one did, yeah, you see price go up, bounce off it, and push in the opposite direction. But it's quite confusing because it's on the other side of. So just imagine, I don't know, you're driving through the middle. This is one curb and this is the other curb. Yeah, so it is quite confusing. But that is a Morse candle. I'll come back to it. I don't want to confuse you too much. I'll come back to that.
Okay.
But it's just a prime example of perfectly lines up with that Morse candle. We marked out the 50% on a higher time frame. Yeah, or it doesn't have to be that all the time. 4 hour. Let's see what else is there. Go back that far. 29th is here somewhere. Yeah. Yeah. No. Yeah, September. I've lost that, but the concept is the same. You know, if you find something, let's try another pair. If you find something on the, such as this, like let's go, what's this, 4 hour on Euro GBP. If we drop it down, 4th of February 21, 2 hours. If we drop it down, is there anything there? No, it's still in balance. Yeah, well, it's been filled here. 1 hour. Do we have anything? No. Yeah, if you take pretty much 50% now, that's your last down candle before the up move. So I'm telling you, because sometimes you get a rejection off these candles. Yeah, so you'll typically find sometimes that candle, the price will come up just to 50% of the IPA, and that is good enough, by the way. So if it fills 50% of the candle, then that's fine. Of the imbalance, it's fine. It's no more a valid IPA then, but it may reject off something else that's to the left of this. Yeah, there's price always rejects off something for a reason, but it's, you know, it's a Fibonacci level or quarter theory or imbalance or a Morse candle. Yeah, the number one is quite important. You need to understand where the banks are trying to go. I'd say, you know, I don't take small trades anymore. I just pretty much, and it's just a confidence. I used to be very much like taking 4, 5, 6 trades a day, but only for like 15, 20, 25 pips. Now I'm looking at 350, 400 pips over a certain amount of period of time. Yeah, sometimes it's 12 hours, sometimes it's 2 days. But I've also started to think now, whereas my account size is that big, I can just pretty much go, because at the moment I'm playing with anything from 18 lot sizes to 33 lot sizes. So it's pretty much that big. If a market moved 15, 20 pips, it could be well into the thousands, and that's all I need. You know, it's just daft to. I could hold it even further, but I just think, well, I don't want to be greedy. I start to panic and think, oh shit, it's going to start going the wrong way, and that just take the money while we can. Let me go through all these rules with you. It might make a bit more sense when we do that. Just trying to find a Morse candle for you.
Jason, can I just ask you something? You know, your top-down analysis on the week, the day, and the 4 hour. Are you looking for? I know you said you're looking where the banks are trying to drive it. Is that kind of the overall trend, or you know, you're looking for your breaker structure, or?
No, yeah, you just do your same analysis as you would do on the 15 or 30 minute or the 1 hour. Let's try gold. So if we go onto daily, onto gold, the banks only typically play with dailies, 4 hour and weeklies. Yeah, obviously they do on the smaller time frames, but just for entry purposes only. So you know, they really don't care about small time frames where nobody to them, we're tiny fish. So we just need to have it's a bit like learning to drive, really. When I don't know about you, but when I started to learn to drive, you know, the instructors kept on saying to me, don't just be tunnel vision. You need to start opening up your eyes and start, you know, spotting that little kid behind the car on the left hand side, or spotting that little old lady on the right hand side that's going to cross the zebra crossing. You need to start opening up your eyes, and that's the same with forex, really. Just, you know, rather than just looking sort of in this area, yeah, and trying to find a trade within here, you will get lost. Yeah, so you need to start zooming out and start seeing the big picture, what is going on, what the banks are trying to do. So I've marked this, and this is back in 5th of January. Yeah, so it's that might be, yeah. So to answer your question, it's pretty much just, like I say, do the same analysis, So that there, you can mark them out. You can see that on here, the 1 hour. So obviously at the moment you can't see it because we're on a daily, but obviously what we've got here is IPA. So just mark all these things out. So price has to at some point come back up to fill all that up, because that's a fair bit of price action. Yeah, it's 168 pips. Yeah, that needs to be filled. Yeah, just remember the way I understood the IPA was, obviously this is our building a house, that's our left wall. Obviously we need our right wall. Yeah, obviously it's great to have a roof as well, but we've also got then our support and resistance, ceiling and floor. Yeah, so imbalance is obviously we need something here now on this right hand side wall to fill all this in. Yeah, so it's just it's a massive patience game, unfortunately. Yeah, but that's, we get paid to wait, whether it's 50 quid or 60 quid or 7 grand trade. You know, the guy who was watching early on, he just did £22,000 trade last Friday. So it's, yeah, it's big money out there. Cameron Lal, I used to watch him a lot, and he used to do trend trading. He's an absolute beast of a trader. He's a member of IM. He doesn't do many. He's part of the trade house, so he doesn't do many calls. But when he does, he's phenomenal. It is invite only, so if I get invited again, I'll send you the link. But yeah, you just need to look at the bigger picture. So what we've got obviously above here is equal highs. We've got liquidity in there. When people, I think Ben was trying to cover it yesterday as well, was, let me just delete everything, be easier. What Ben was trying to cover yesterday was he didn't know whether it was break of structure or whether it was creating liquidity, internal highs and lows. So what we've got obviously here is our high, and then obviously down here is our low that happened today, yesterday and today. So this now is our range. Okay, so from top to bottom is our range until we get something breaking out of here or out of here. It's not break of structure really. Yeah, so this we would class as here would be internal highs. Internal high. Okay, so it's pretty much the same as liquidity really. Yeah, so that's your high. So that at some point needs to be taken out as well, because we know there's money sat there. Liquidity, internal high. Obviously these are your lows. Yeah, so your lows would have been here. Yeah, obviously that's broken now, so they're not valid anymore. Yeah, and look at that. What it's done now is also created perfectly more liquidity. Yeah, to be taken out at a further date. So, you know, if you're looking at the 1 hour, you'd never be able to spot that really, unless you went very far back. Yes, I know a lot of people just zoom in and just sort of concentrate in and around here. Yeah, and what people would see here is just, oh yeah, that's just a low. But what it is, obviously, it's part of liquidity which needs to be taken out at some point. Yeah, so it's very important to look at the higher time frames to get the overall bias of what the banks are trying to do. Obviously, what's above internal high is imbalance right here. Okay, and what is that protecting? What's the imbalance protecting? Last up before the down move. Did that down move break structure? Number 13, is it? Yeah, number 13. Does the particular move break market structure? Yes. If so, the bank left money there to mitigate it back out of. Yeah, so it's just, to me, it's just a bit of a game of roulette. You know, if you can get the probable favor in your court to land on green, black or red, then fantastic. Yeah, so it's pretty much the same as Forex. What can we do to try and find out where the banks are going to go next, or you know what they're trying to do? There you go, number 3. What candle is causing trouble? So this obviously clearly caused trouble. What did it do? It left a massive gap there, you know, for price to come back up to. What's just below that? What's protecting the IPA? These highs. How are we going to get up to there to take these highs out and fill that IPA in and come into that little candle up there to then take it further down? Yeah, so I would imagine, obviously I'd be looking to try and take a buy from here. There's imbalance in here as well. Yeah, so you could even see this imbalance being filled up to here, back down. Yeah, it won't go. I don't think it'll take. It won't go below here because that would be breaker structure. It may come back down again, and then it'll take up to take these highs out up to the imbalance. Where were we? It's around there, isn't it? That is on the 1 hour. That's the 1 hour IC candle. Yeah, up here. So let's bring this down a bit. Yeah, so you could, in theory, have 3 trades here. You could be. So if and when you couldn't find a buy position from here, great. Yeah, so let's work out our stop loss. We entered. That's your first. That's your first one, which always trying to get back up to there to start with. So you if, like I say, if it does come back into this area, which it has done pretty much already. Yeah, this is you'd call this an aggressive trader, which is, I trade quite a lot of this. So you can see this little down candle has popped this balloon. Okay, so that was the last down before the up move. Obviously only 1 hour now. If you dropped it down to different time frames, let's do that. Let's go on 15. 5. Yeah, it's ever so slightly broken structure. So we mark that out. Was it just about? Yeah, literally, I don't know, it's like half point of a pip maybe. Yeah, so it's broken structure. The body is broken above, so therefore we're looking for buys. Yeah, so this one's out of it. You could have caught a cheeky buy from there if you were fast enough. But it's the same thing. This is just Wyckoff stuff. Okay, this is your lows. There's money sat there. Yeah, so that's ST and phase B. This is your FU candle. Yeah, taking that liquidity out, which is your spring. Not your spring. Your spring. So it is liquidity grab. Yeah, and that's your test. Yeah, testing that area again before it's then gone up to buy. Yes, that would be. We got test. Yeah, you test. Let's delete that. So yeah, I would now be looking for. There you go. That's now literally perfect. I would take a buy from there. Yeah, and that's stacking. So I would take a trade from here. If you're not confident enough, wait for that break of structure to happen. Yeah, this is not great break of structure. You know, you want a clear break of structure would be good. If we can break up to there, a pull back into this zone, I would take another trade from there. Yeah, so now I'd twin trade this. So I'd split the risk. So if I put 1% on each trade, so I'm risking 2%. Yeah, one trade from this area. Yeah, what's our risk? Just below that wick would be, where are we? 14 pips. Yeah, risk. But are you willing to risk 14 pips? Even let's just say we're trying to get up to here, 14 pips to gain 350 pips. 100%. I would be. Yeah. So 2 trades here. So remember, 350 pips. I'm now stacking, twin trading. So, you know, I'm going for 700 pips now. Yeah. So if when it does and it allows you to, feel free to stack. But please don't do it if you're not confident. If you're going to do it, remember to split.
How are you getting to where your stop losses should be?
Stop loss is just below the previous wick, low or high mid.
Okay.
Yeah, so if you're very feel on edge, just give it an extra 6-7 pips. You know, it's nothing. It's still a 6-to-1 trade. Yeah, so
Gotcha.
you're willing to risk 1% to gain 6%. That's great. You know, and the hard part is again what I used to struggle with Not saying everybody does, but when you've got £1,000 account, 6% of that is not great, is it? But if you can see the big picture, when you're playing with 50, 80 grand, 90 grand, 100 grand, if we're all going for funded accounts, yeah, that's some big money. You're talking now 6% of 100 grand in the space of, well, let's go from there to there. That's done from there to there. In the space of 40 minutes, that's done 64 pips, and that is 2%. Yeah, so well, if you went off a tight stop loss, 4% growth in 40 minutes on a 100 grand account, you've just made 4 grand. That's where the big picture needs to be. And it's hard. I used to struggle massively with it.
And your middle where your stop loss and take profit is the middle, obviously where the line is. That's where it's changing. That's your entry point, yeah. So the top of the stop loss.
Yeah, my entry point would be here. Yeah, so off the test. So Wyckoff is very confusing. I understand how it works. I get it, but I don't use none of it at all. Only these 3 basics. Yes, so you've got your lows, your liquidity wipe, and then a test. It happens everywhere. Yeah, and that is literally all you need to know. To obviously, if you're not overly confident, just wait for that break of structure. Wait for this to happen. So you've got liquidity built up. So lows basically, just candles, candles and candles. You get your wipe, yeah, your FU candle, the fuck you candle. Bank takes them all out. Wait for the test to happen. Wait for the break of structure, and then get in.
Right.
Yeah, and there's nothing wrong with doing that. I still do that now. If I'm not fully confident on all this here, I still wait, because it's not a great setup. Ideally, the break of structure, I would like it to be at least up here. You can maybe on a 3 minute it might look a bit better. No, it doesn't actually. It's worse.
And so then you'd see that break of structure. So if you're saying wait for so obviously now, how you are now, you'd see that test and go, oh, I'm getting in now.
Yeah.
But then obviously you're saying to us, if you're not that confident, wait for the break of structure.
Yeah.
Where would you then be getting in?
The same principle. So last down before the move. So this yeah. So this candle, yeah, that's your last down before the up move. Obviously, when you got a big engulfing candle, it shows signs of power. It wants to move upwards. What you're waiting for is one of these needles to come back and pop that, because they're mitigating. It happens on every time frame. What did this candle do? Perfectly came into there once, twice, 3 times. So you did really have 3 chances in, because we're on the 50-minute time frame. In the space of 45 minutes, you could have entered any of them 3 really. Yeah, and then you would have been in a small amount of profit by now. What's that? 8 pips, 10 pips.
So you would have got in where it broke there, and then where would you put your take profit? Just above?
So this would be a fantastic trade, yeah. So buy. So if I was entering off this one, this first wick that came into there, where the grey meets the green colour, I would be entering right there. Stop loss on this would be very tight.
Yeah.
So right a bit below that wick. Yeah. So it's 5 pips. If you're not overly confident, stick it there. Yeah. So it's not the end of the world to have a fairly big stop loss. If you're entering on the smaller time frames, the stop loss will be tiny anyway. If that was on the 4 hour, it'd be absolutely huge. Yeah, but let's see what we're gonna target. Even if you targeted this up before the down move here, let's go halfway. That's 2.5 to 1. Yeah, so that would be 98 pip move. That's good.
Okay.
So if you were to move your stop loss again, if you're a trader, if you want to go for it, you're now playing with a 14 to 1 risk to reward ratio just from there to there.
And so so that take profit, you're pushing that back up to your imbalance.
No, the imbalance is there. Yeah, so that'll fill that easily. This is the last up.
Oh, last. Sorry, yes. So it's got to go back up there too.
Yeah, so I would easily take it up to there. And if you're not overly confident, and I do this now, is I will take off 70 to 80% of the trade here and let 20% run back up to there. Yeah, now I'm playing with what is that? Can't see that. Is that 45 under? Yeah, 49 to 1 risk to reward ratio. Yeah, so you just need to get into the nooks and crannies and try and be quite quite tight with your stop losses. It's not, again, like I say, it's not the end of the world if you want to go down below there. It's still a 9-to-1 risk to reward. So you're risking £10, but to potentially get 90 quid back.
Yeah.
This is not, it's not a bad risk to reward. Or even if you had the balls, hold it up to there, because there's a major imbalance up here. Yeah, and it's something I'm working on. I've been sort of not done over, but it's my own fault. But I've lost so much money in the past. I'm thinking, well, I'll take 2, 3, 4 grand off the table now whilst it's there. But the only thing it's going to do is just boost your confidence. So if you take off 80%, let's say we take off 4 grand off the table here or here, and you let the rest of the trade runs and it gets up to there, all it's going to do is just boost your confidence. You think, oh shit, I should have left it, but you've taken your money. And I would advise it, take the money while you can, because if the bank is it's the first time banks they're ever going to give you money. So and then if you're going to run back up there, even if you left the 20-30% of that initial trade running, you're still going to get an extra, same again, probably 3-4 grand, because it's gone from there now all the way up to there. Yeah, and if you've got the balls, you can let it run up to there, take them equals high out, or even up to there to take back the 1 hour institutional candle that we were looking at earlier on. Yeah, so this 1 hour sat up here and the major improper price actions there. It's just a matter of how patient you are. I hate leaving trades open overnight. I don't really do it. I don't like it. But sometimes you just think, well, you know what? If it's there, if it's for the taking and it looks good, obviously move your stop loss into major stop profit and just let it ride out. Or like I say, take profit. And then what could happen here is you could run that up to there. So we've also got this last up before the down move here. So we could be looking at a small sell from here. Yeah, so we could buy it up to here. Yeah, we could, that's again a nice tight stop loss. Take it back down to where it's pretty much come from, and then find another buy to take it back up to that high up there, the 1 hour high. Which again would be 15 risk to reward. So if we traded this one, that's a 16, that's a 9, what's that, 25 plus 15. So you've just done 40% if they all pull off. You've only risked 1, 2, 3%. If you're going to stack them, 2, 4, 6%. So you just risked 6% of your account. So if you've got 100 grand account, you just risked 6 grand. You're willing to lose 6 grand, but if they all come off, you just made 50 grand. That's the benefit of obviously risk to reward and the size of the accounts. And that is what I really did used to struggle with. It was like, oh, you know what? I'm doing this for 8 quid, 10 quid, 40 quid, 60 quid. It's a bag of shit. It's no good. It's not going to change my life. But it's definitely certainly started to take a turn.
When you're doing lot sizes as well, what sort of like, so obviously you see the 0.01, 0.1 and 1. What are you doing at the minute?
Anything between 18 full lot size and 33 lot size.
But obviously as we start out, just pissing about on demo, obviously it's relevant, but
If
when
you
we start with real money, you want to be going.
If you go on this, mate, click on calculators.
Yeah.
Position size calculator. It'll work it all out for you. So you choose your pair.
Yeah.
So we're pairing that, whatever your account currency is in. Account size, let's say we've got, I don't know, 14,645 quid in there. Risk to reward ratio, 1%, or you can swap it for money if you want to swap it and you want to risk 350 quid or whatever.
Yeah.
But, you shouldn't be over leveraging, so just swap it back to risk 1% or 2%. Stop loss, let's say we've got 18 pip stop loss, and then calculate, there you go, just worked out for you, 1.13.
Right, okay.
Okay, so obviously 1% of 14 grand is 146 quid. So if it goes the wrong way, you lost 146 quid. Obviously 2% will be double. Yeah, and double lot size as well.
Yep.
300 quid. So yeah, that's good.
My FX book.
Yeah, I used to over leverage. Obviously, it's my own fault. I used to maybe put on like a fucking 6 lot size, and then when I was meant to be losing 300, it would be like 1,400 on a £5 account. It's my own fault, you know. It's just I'm shooting myself in the foot. It works if you stick to it. That's what I would say. What else we got? What does price want to do next? So is it, what that means basically is price that's more so of entries really. Yeah, so is price trying to just fill in the gaps, or is it trying to do something, or is it trying to break structure, or is it trying to fill IPA in? So obviously we can see here where we had our lows, ST in phase B, spring, and then test. Obviously this did, I can just see it now, this did clearly break structure. Yeah, so we're just waiting for it obviously now to break here, yeah, which it would do. You've taken the trade for a reason, so just let it run out. You know, that's another entry here. So you could have entered from here now on this test. So you could have entered this hollow candle here. That's the last down for that move. That wick came into it. So here, could have bought from there. Change it, different color. You could have had a trade from there. This one, last down before the up move. Did anything come back into it to mitigate? Yes, these 1, 2, 3, 4 candles, another buy there. Yeah. So we've done the same here again. So obviously this one would have been in drawdown, but it's fine. We've gone a little bit into profit. Drawdown, you've been back into profit. Here, another one. So open of the body, 50% we're looking for. Yeah, wick perfectly. I don't take trades now. It's not a great time, obviously, with the risk, the spread. So I typically trade. I don't take between 7 AM and 4 PM. Really, I trade. Do a lot of trades then, because that's when you get the big market moves. If you're in work, if you're doing smart money, just set an alarm when it's getting close to that price, and then obviously just watch it for a few minutes and then enter. Yeah, so we got yeah, you got fib levels. So this is pretty much, I go through all this before taking a trade. So top down analysis done on a Sunday. Where's the order blocks? So the institutional candles, mark them out like this here. Yeah, so just use a line, mark them out and label them. What candle is causing trouble? Obviously identify which one is causing trouble. Why? Because the banks will come back up to there to mitigate out of that. Identify break the structure. What does price want to do? Fib levels. So if you're taking a fib, yeah, don't settle for anything below 50% because you're getting a bad deal. Like I said, you're better off getting a bigger discount. So if price can get back up to these areas, fantastic, into the golden pocket ratio. Imbalance we know about. POI, point of interest, just previous highs, previous lows, where you're going to take the trade to. Yeah, so if we were trading this from here, we'd be taking it back down to these lows here. Engulfing candles. Do you all know what an engulfing candle is? Yeah. The chat. Put it in the chat. What is the chat? Oh, there it is. Chat. Guys, if you're really not sure of anything, you want me to go over everything again, it's a lot to take in. Please say, does the IC move take out liquidity? So this does, that did early on. So that 1 minute candle I was showing you here. Oh, sorry, no, wrong way. So like here. So there's yeah, so you could have liquidity sat above here. Yeah, again, same thing, it's vice versa. Yeah, so that's your money sat there. That's your liquidity. And then you've got your liquidity grab there. So does that IC candle last up, take out money? Yes. Again, it's more probable for price to come back into there to mitigate out of price. What else we got? Break structure, big news. Any big news? News is I don't follow a lot of the news. Just I do have a look at it. If there is news, I just adjust my stop loss to give it a bit more breathing space. Yeah. And then the most important part for me really is the DXY. So understand what the DXY is doing to the dollar index. So like this is doing a 4 hour. Yeah, it's quite bullish at the moment, but it has broken structure. Yeah, so you'll see a lot of movement for the dollar index at the moment because there's a lot of Bitcoin news going around. I think Google have just said that they're going to start accepting Bitcoin as payment for their Google ads. So my taxi company got Google AdWords. So obviously I pay with sterling from my bank at the moment, but now they've just said they're going to start accepting Bitcoin with that. So yeah, it's quite strange how everybody's now jumping on the Bitcoin bandwagon because it's starting to push up now. You know, it's at least 2 months ago was the biggest scam ever. You lost all your money and so forth. But yeah. What else we got? Wyckoff. That's pretty much what I just covered there. So you've got upthrust, the UTAD upthrust after distribution. You got a test and then you got a sell off. That is another ball. I will cover that in a separate video. What I am doing is doing a step-by-step process of literally explaining everything very, very, very basic. I'm about halfway through, so I'm not gonna put them all up until it's all complete. I'll put them all on. They're gonna be labeled and numbered on YouTube, so you can watch them in sequence order. A bit like the section 4 on the Facebook thing that we got, but just literally concentrate on one thing for like 5, 8, 10 minutes and explaining it, breaking it all down. So then it's just a jigsaw for you to start putting together. Check higher time frame. So if you traded on the 1 hour, check the 2 and the 4. Eat off the crumbs from the sharks. So the sharks are the banks. You know, we'll never be them. So unless you've got 500, 600, 700 billion pounds to play with, you know, we just eat off the crumbs. So that's what we're trying to do. We understand what they are trying to do. We are trying to understand. We do understand what the retail traders are trying to do. So we just obviously need to be in a good position and trying to put ourselves in that position to take advantage of what the bank's doing. So just eat off the crumbs. So let's, you know, a few crumbs off 500 billion, it's going to make us very rich. Wyckoff, 2050s and 80s. So the banks love to play off like 1750 or 1780 round numbers. 1900s, so it's like quarter theory and so forth. But yeah, 20s, 50s, and 80s, you will start to spot some levels. I think that low there is quite close to 1723. That is, 16, yeah, around 1680 mark. 1680 is there. So yeah, 20s, 50s, and 80s. Where's the weekly anger? Oh yeah, this is very, very important. And this has changed my whole trading game. So daily rules. So let's make this bigger for you so you can see it. So Sunday. So if you get, can you see at the bottom, you can see that this only works on the 1 hour time frame, by the way. So it sections it off per day for you. So Tuesday, Wednesday, and Thursday, you can see, like I said earlier on, the gold, that's the only days I trade. Yeah, so Tuesday typically is your anchor. Yeah, and then we'll work off that. So what we're looking for first is obviously on a Sunday evening, mark out your charts, identify gaps such as imbalance, and then a point of interest. Yeah, where the market wants to go, highs and lows. Monday, it typically retraces or rebalances the previous price action. Okay, this always happens. Yeah, so let's go back. So Friday. So this was from, let's say that's the Friday at the bottom there in the silver writing or the grey writing. Friday across to, where's Monday? There you go, Monday there. Yeah. So in that orange box, that's Monday to Friday. So on the next Monday, you can see here on this Monday, or from the Sunday evening, if you like, what has price done? So it's retraced and rebalanced the previous week price action. So obviously here, we can see that price is obviously pushed upwards here. Yeah, on the Monday, what has price done? It's retraced. Happens every time. It's like it's a weekly cycle. Yeah, so if you can start understanding how the market moves and why it's doing these things, and it does do these things, then we will be looking for sort of sells from here, wouldn't we? Why? Because it needs to retrace and fill all this week's price action. Okay, that's a perfect remorse candle there for you. That's the last down before the up move. Sorry, the other way around. So we were looking at here. So last up before the down. We would have thought this would have rejected off. Let me delete this. Sorry, I'm mixing stuff here now, but I just spotted this. So here we would be sort of looking at last up before the down move. Yeah, same here. It came back up, tried to mitigate out of here, and then what it did do is it didn't push down; it pushed through. So that would have hit our stop loss. But you can now use this. And this is a remorse candle. Okay, so this is now a buyer's remorse candle. So you can mark that out. So beforehand, we would be looking at obviously sells. Okay, so we'd be obviously looking for sells from here, wouldn't we? Because we went up from a down, back up to here, and then sell away. Yeah, it didn't do that. It took us out of the stop loss. But what we could do then is we could mark this candle out. This is the remorse candle. What has price done here? Come back into this area, into this remorse candle, and then you could have bought upwards from there. Yeah, it's not a great trade, but that's the idea of it. Yeah, so that is a remorse candle. Okay, so when it doesn't work out one way, you can flip it on the other side, and it's come back into that area, so it's still valid, really. Yeah, because the banks have still got orders there, basically. Yeah, so if the banks are trying to push price up and then back down, but it failed, they would have done the same, because obviously that candle there is a down before the up move. So banks have still got price money in there in that down candle, so you can still go back to use it. But I wouldn't worry too much about it. It doesn't happen that often. But if you do find that you're in that situation, you're thinking, oh shit, that's just hit my stop loss, just keep an eye on it or mark it out, leave it as it is, like I've done here in this orange box, mark it out and see if price comes back into there. So you're basically now flipping it, rather than it being an up before the down, it's now a down before the up move. You can come back to it and then buy off. Yeah, Monday, retrace. Tuesday, we should see our high or low of the week to play off as the anchor. So this has been a massive game changer for me, going off the Tuesday lows. Doesn't always happen, but typically it does. So that was Tuesday high. Tuesday. It's just going to be for that day, basically. So let's smaller. Yeah, so whenever your low is all the high for that day, you should work off that. Okay, so we can chop it down. Tuesday. Tuesday. There. That's Tuesday. Okay, so where's our low? Yeah, so it's this candle here. Yeah, let's delete this. So this candle in here, we could have worked off that. Okay, so let's mark that out. That's your low for that day, for the Tuesday. Okay, so obviously what's happened beforehand was on the Monday, price has filled back in and retraced of last week's price. Yeah, and then we got the weekly anchor, which is the Tuesday low, this candle here. So let's this like I say, I know I've said it twice now, but it's a massive game changer. It did change everything for me. It's just a cycle that I've played off. There you go. So that candle there, I've just broken it down from the 1 hour to the 30 minutes. What do we have straight away? Last down before the up move. It broke structure. It broke all these here, broke out of this area. So therefore, we're looking for a trade straight away. That's a simple trade. And just again, there you go. It goes back to basics. Yeah, liquidity sat there. Liquidity sat there. What's this? Liquidity swipe. That's just spring. Okay, ST and phase B, Wyckoff. Yeah, that's just spring, which is basically money being taken. It's liquidity grab. Yeah, the banks have come out. That's your fuck you candle. Taking your money. What is this here? Any of these is a test. Yeah, and then what's happened then? It's pushed off for $210 pip move. Yeah, that's really as simple in a nutshell how I trade. But if I didn't know about that Tuesday low or high, I wouldn't have really been able to identify that. So you just identify the Tuesday low or the high, and then you play off that as a weekly anchor. And if it comes below that, then everything's void. Yeah, obviously, hopefully you would have taken profit here, or taken something off the table, left. Remember last week was NFP as well, so that's why all the big candles was on gold. So hopefully, yeah, if you would have left 20% on the table, your stop loss would have been in stop profit. So if you would have come back down to around this area, you still would have won or taken something off the table. As soon as it's broken, which it did do here, forget it. The trade's gone. The trade, obviously, you can see it's just dropped and dropped and dropped. But if price would have stayed above this anchor, just remember anchor obviously is the bottom. Obviously, we all understand how ships work. Bottom of the sea, the anchor is, that's your sea level, or the sand, even on the bottom of the ocean. If price comes below that, yeah, the whole thing is void. Just leave it be. It's gone. Well, analyze what you're looking at. Yeah, so you could be looking at this last up high here before the down move. So it's broken. You could be looking at going back into here to then sell off. Yeah, so but yeah, that's a different story. But yeah, that's literally, you see, all I did was I was on that 1 hour time frame, wait for it, and this is exactly why I only trade Tuesday, Wednesday, and Thursday now. So on a Tuesday, which is obviously tomorrow, yeah, if this happened, which it did do last week, I got into this trade. Tuesday, broke it down to 30. You can drop it down to 15 if you want. Yeah, the low is still there. Yeah, and what you're doing is just getting a tighter stop loss. Okay, so that is your low. So let's mark out the last down before the up move. Where do we get break of structure? Okay, that's what I was saying to you earlier on. If you're not confident, wait for the break of structure to happen. Yeah, which you would have had to anyway. It would have broken structure. Broke of structure. Yeah, price came above obviously all these here, showing signs of obviously strength. It wants to push upwards. Came back in to this last low, last down before the up move, and then pushed up. So we could have bought from here. Yeah, that was a nice trade. Stop loss just below. If you want to, again, if you're not confident, give it an extra few more pips to let it do its breathing space, do its thing. Yeah, where are we taking it? Maybe these highs here will be your first pot probably. That's a 3.6 to 1. Yeah, what else do we got? There you go. That up there. See that's, let's delete that. Last up before the down move. Okay, let's target that. Did it get there? Yeah. Smashed it. Yeah. What that has done is, I just noticed that it's just literally just mitigated out of this candle up here. Last up before the big down move. What price has done is this has come here. This candle here has filled a little bit of this imbalance in here, but not all of it. Therefore, price at some point needs to come back up to fill that in, and obviously take out what it has done is taken out liquidity sat up here, because all these cells from here, say, their stop loss would be here. It's the same thing over and over and over again. Yeah, the banks have just come up, just literally enough to take them out. Fuck you, just taking all them out, mitigated out of that once more. So remember, we don't always see it just happening once. Yeah, don't know if you can see that. I'll zoom in a bit more. So up before down move, mitigated out, but it's gone back to it. Yeah, a few days later, or about 2 weeks later, mitigated again out of it, also taking all these people out, and then did a massive drop. Yes, it was NFP, but you know, if the banks are manipulating the market, I don't think the news is gonna. It's the trade that the market's going to do what it wants to do anyway. Yeah, so that's why I don't really believe in the news that much. But if we would have taken it up to there, like I say, up to there, that was a 6.7% growth. Again, if you're playing with what, 10 grand, that's 670 quid. Is it? Yeah.
Are you pre-marking up charts now, Jace, or do you just sort of like do your analysis as you go now?
Yeah, I do. I do my chart markups on a last night and today really. So I wait for price to do what it wants to do first, like today. So obviously Monday, if you go back to here, we're waiting for the retracement, the rebalance to happen. If it doesn't happen, then I won't really concentrate on that pair.
So for example, on this gold, go to today, that didn't really retrace back. So would you not really be looking at this for?
Let's delete.
Just like, for example, like what would your analysis would have been yesterday and today?
Yeah, so it started to retrace. You won't get a full retracement, but what it has done is rebalanced or filled in balance basically. So this obviously, let's go back to replay. Let's do that. Yes, that candle happened last night, last night, wasn't it? So on the Monday, what it started to do, which is obviously today, what it started to do then is fill in on the Mondays to obviously retrace. It's retracing back on itself. Yeah, so it's filling in obviously all that there is in balance. Yeah, so it's just filled all that imbalancing basically up to where I am today. By now, we're around here, aren't we? Yeah. So
from tomorrow, then you'll be looking for the new high or low then.
Yeah. So Monday it's done its retrace. Maybe by the time we wake up at 6, 7, 8 in the morning, it
fill that imbalance up there.
Maybe up there, yeah. So fill that. If it has gone up to there, then I would typically say that would be in that area our high for Tuesday, Wednesday, and Thursday. What it has done is mitigated out of that and filled in balance. But if that is imbalance, if that has been mitigated out of, that's fine. That's great. But what we can do is, if we had, let's say we've got our up candle here before our big down move. Let's say, let's do this one red. Down, this one was our up green candle. Okay, so if price is overnight going to start doing this, gets up to here, and then so therefore what we do tomorrow would be mark this out. This is our new, because remember we always go for the most current last previous high before the down move, the last low, last down, last up. Yeah, it's not like 16 years ago or last week or 4 days ago. Well, it may be 4 days ago, but we always look at the most current one. Yeah, is it active? If it's been popped, forget it. It's been and gone. Yeah, so if this happens overnight and I wake up in the morning and it's there, last up before the down move, price will most probably do this, come back up to here. This is where I'll be looking to get in, because I know that is my weekly high. Well, I don't know that for a fact, but it's worked out the last sort of, I don't know, 3-4 weeks. Very,
So
very
you're
well.
always trying to get in on a retest instead of the previous one straight away. So when that, yeah, see, I think that's where what I've been doing is like where it's been meeting up at that point there, I've just been sort of like taking that point straight away. And then it's carried on going.
Yeah, that's just wait for a accumulation or distribution. So just break it down to the 1 minute. There's nothing wrong with obviously your analysis is right. So obviously your tag is in the right place. Yeah, it's just you want to wait for break of structure. So if price was coming up, so imagine it's done this. So we were looking at here, weren't we? So imagine price was doing all this. What you want to see is a lot of people will take this trade. See, from their bang, they'll take that trade.
Yeah, that's what I've been doing.
Then is, oh, I'm in profit, and then it goes to see later.
Yeah.
What you want to see is price to come up to price to come up to where it is now here. Distribute or accumulate across. Yeah. This shows massive signs of weakness. It doesn't want to go through. Again, it's just a game of probability. What is the probability of it dropping from here? Great, because it's just sitting there for, it may take,
Accumulate, swipe up, take it out, then push down.
yeah. So prime example, before on that entry, is it down here? Yeah. Okay, so when you're distributing something, obviously you're giving stuff out. I think I've got number, where are we? So entry requirements. Yeah, so number 2, so shape the market like a bowl. Okay, accumulation is buys, or distribution is sells. So I don't know if people know that, but accumulation, you're accumulating something off somebody. So if I accumulated a hoodie off you, Marvin, I'm taking it off you. Thanks very much. But it's the same here. So what you're waiting for is a bowl shape. Okay, always works. Well, I wouldn't say always, because I'm not a perfect trader, but it's all these things add up. So therefore, because it's scooped like that, it's broken structure. We can see it's broken here. Therefore, we're looking for buys. How are they taking a buy from there? Tiny, tiny, tiny drawdown. Away we go. Yeah, and it's the same thing the other way around. Let's flip the scale. So the same thing. Yeah. So if we were looking at this up before the down move, it's come back up to this area. If you were not confident to take it, wait for the break of structure, which it did do here. It's broken these candles. Wait for it. What has this done? It's come back up to here. And then it's accumulated, distributed the price. Obviously broken again, and it's nothing wrong with it even getting down here. Yeah, I'm sure you'd rather get in here and lose 10 pips than get in at the top and get it wrong and lose the whole trade. Yeah, so just that bowl is just imagine obviously filling with water. What's going to happen in the end? It's going to overflow. Better turn my skin scale. Okay, so if we're filling this in with water, what's going to happen in the end? It's just going to overflow. Yeah, I know obviously the gravity will usually take it down, but yeah, that's the concept of it. If the bowl is full, you just need to wait for that to happen. Again, it's like I say, it's the same as, so that's what I used to be the same as you, Marvin. I used to get in on instantly on that trade, and it happens again on every time frame. Yeah, and I used to fucking do me over. Yeah, I thought, oh, for fuck's sake, I've just lost that trade or whatever. Gold is fucking all over the place at the moment. It's lethal. Yeah, so look at that, same happened again. So we were looking at this area here. What's happened? Bowl has scooped. It's dropped. Well, we should have
because it didn't break that previous high. So if it did, then you'd be looking for it to go up. That's what you're saying.
Yeah, so here we're looking for the up before, well, up before down is broken. It's not broken great. So I would always enter on the 1 minute or the 3 minutes. Just need to watch price, see what it does. Where were we? Oh, come on. What is that? 29th of July, 21st. Replay mode. So let's play from here. Because that was your last up before the down move, wasn't it? Here, up before the down move. Yeah, so far nothing's come up to it. I don't think to come out of it. That's a long time. Let's change this to 15 minutes. But it didn't get up there anyway. Yeah, so that's still pretty much active. It didn't get up to this one either. Yeah, but
Okay.
it's
So
obviously
they're points of interest now.
yeah, so it's clearly wanted to go down anyway. It's broken structure, so we would have gone off this one. This here, up for a down move, broken, come back up, mitigated, and dropped. You could have taken that trade. You could have taken a few trades in here. Up for a down move, back into here.
I think I'm looking also like always in the bigger time frame. I can't see these smaller entry points. That's what I'm.
Yeah, bigger time frames is very, very important. But yeah, like here, this would be obviously our last up for down move. Yeah, obviously this is a great setup. Obviously we've got equal highs waiting to be taken out here. Yeah, we've got tiny little imbalance in between there and there that needs to be filled. Yeah, but then just start dropping it down, because if you wanted to look at entering from here, your stop loss at the moment is 46 pips, which is fairly big. Yeah, so let's chop it down to the 2 hour. See what else we got. There you go. Look at that. Your stop loss is pretty much just halved. Yeah, so it's now this candle we're going off. Yeah, so let's move the stop loss. Our stop loss now is 24 pips. Again, let's drop it down. See what else we can see. 1 hour. There you go. Let's move it. You get a tighter and tighter stop loss. Yeah, but when the time comes, let's go to 30 minute. So I will do this all the way down to the 1 minute really. And if well, depends. If the 1 minute doesn't look good, then I'll just leave it. And that's pretty much good enough for me. Yeah. So let's see what that is. What is that? 10. Yeah, 12 pips stop loss. 12 pips to potentially get back down to, well, that would be your first TP. Yeah, your first lows. Your previous lows, sorry, would be, what's that? So that's a 20 to 1 risk to
But you
reward.
wouldn't be waiting for it to go up at that point, no, because obviously it could just mitigate before that, couldn't it?
Up where, sorry?
Like from that top point now compared to where you had it, which was the one down, it could just
Oh yeah, it could.
mitigate at any point in that zone. So once it passes that first point, you're then looking at when it's going to turn.
Yeah, I used to enter again like here, so my stop loss used to be very, very big. I used to have major drawdown. So this is just fine tooth comb things. Yeah, if you can get a tighter stop loss, I would say 9 times out of 10, my trades will get up into them areas, because if you look here, even on 30 minute, what is here? That imbalance needs to be filled.
Okay, yeah.
Yeah, so again, there's nothing wrong with going off that 4 hour that candle. As long as you're using correct risk management, you won't blow an account, because your risk is still 1% from there to there. But if you get a tighter stop loss, because that's a 4.5 to 1. But if you can get a tighter stop loss, we're now playing with a 20 to 1 risk to reward ratio. Yeah, are you willing to risk 12 pips to gain 245 pips? I would definitely most be. Yeah. Would I risk 46 pips for 250? I would, but you know, it's, can we get a better deal? It's always, can you get a better deal? You know, it's, you know, if we were going on holiday or buying a car, we obviously want a better deal. We want to get the best price possible. Yeah, so if you do your proper calculations, 1% of like that or 1% like that is still going to be the same, because the lot size will change for you. Yeah, obviously the lot sizes will be bigger like it is now, because obviously it's a shorter stop loss. But if it's down here, your lot size will be bigger, smaller. Sorry, God's sake. Yeah, but also just follow the book. Just do it properly. If you want to risk like that, that's totally fine. There's nothing wrong with it. Just to get your confidence up. If you want to enter there, go for it. 46 pips. So let's. What pair was that? GJ. Where are we? Calculators. Size.
Is it just me that can't hear Jason?
I think he's back on now.
I don't think he's talking, is he? Oh, he's muted himself.
Yeah, I think he's muted himself.
What a dickhead. Can you hear me now?
Yeah. I was going mental then, like lips moving and that, and I was like,
Yeah, I've been on an hour and a half now. I won't keep you too long, guys. I'll finish now. So yeah, if we're playing with 50 grand on a 46 pip lot size, they'll give you 1.66 to play with. So if we've got a tighter stop loss, we're now playing with a 6.3 lot size. Yes, obviously every pip it moves now, you're going to get a lot more money to your move. Yeah, so let me just see what else is there. Anything else we need to cover? I think we covered quite a lot in a short period of time, really. It's the weekly anklet, yeah, the weekly anklet Tuesday. Search and destroy stop losses. That's come from Call of Duty. I don't play it, but somebody else told me about it. Search and destroys. Just basically we're identifying the highs and lows, you know, liquidity. We just need to search for them, and obviously trying to work out how price is going to get up there to take them out. Equal highs, taking out buyers, sellers, and most candles. Cover that slowly. Supply is it's just my examples. Supply is China, so obviously we all know everything's made in China. So typically supply is at the top. Yeah, so this is a supply area. So this is what the professional traders call it. So this here would be supply. Yeah, and we've got supply, demand zone. We've got demand zone. Supply zone.
There is, yeah.
Yeah, so that's your supply area. Okay, so obviously as Brits, we manufacture absolutely bollocks nothing here in the UK. So we are Brits here, we are down here. We're in, I don't know, right? Yeah, we want the demand. We want, I don't know, fucking, let's say Xboxes. Obviously they come from China, or iPhones. We're big demand down here. And then the supply area is at the top. Yeah, so we all are trying to get up to China, to the supply area. Yeah, and then obviously then demand would be down at the bottom. So it's always the same. Supply is at the top and demand is at the bottom. So if we got last down like this one, is it this one here? Yeah. So we've got last down before the up candle here. That is your demand zone. Yeah, so people are demanding, trying to get into here. To distribute price, and obviously supply is at the top. ASH and L is Asia session highs or Asia session lows. So it's not really a practical thing that you need to know about, but to me it's pretty much, if you can be a book of knowledge and you know a lot about trading and why the market moves in certain ways, then great. So like, yeah, so here. So that is your Asia session in here. Yeah, so between like midnight and 6 in the morning, what happens? London session opens. What does that wick do? Takes them all out. Yeah, so it's not really, doesn't do much, to be fair. But what you do find is, as soon as it does take all these out, you get a big run up. Not a big run up, but yeah, you could. It's just understanding the market. You know, it's if you can spot all these small things and you understand why the market is moving in the way it's. You know, it's like I want to learn like another language. If I can understand it by tomorrow, fantastic. So people say Forex is language. If you can understand it, then obviously we would all be millionaires. But obviously, the more you would know, the better you're going to be at trading. What else got? Identify the trading range and find the tunnel. We've done that early on. Wyckoff accumulation, as I was talking about early on, Mohammed. So distribution is just is from at the top, distributing, being sold. And then accumulation is something at the bottom. It's been buying. Yeah, so I'll stop it there, guys. So unless you've got any questions, that's quite intense. I know it's easy for me to ramble on. It's hard to take a lot of stuff on, but like I say, these small little snippet videos, it's just going to be just on institutional candles. That's it. Just on liquidity, just on internal highs, just on imbalance. So they're going to be like between 6 to 8, maybe 9 minutes each video. Just literally, like you can watch them back over and over and over again. So if you've got any questions, you can shoot a message to me. But yeah, it's quite hard. I know it's hard to take all of it in, but I haven't really given you any chart markups really. But like I say, unless you understand fully what you are looking for, there's no point you going blind in and not knowing what you're buying or selling or why you're trying to sell or buy. Yeah, that's I would say that's the most important part, is the concept of understand what the banks are trying to do. You know, it's very, very important. Yeah, and where they want to end up. You know, it's like I'm trying to look for a car at the moment, so I'm looking to go down towards Northamptonshire. So sometime this week, I have no idea how to get there, so I'm going to set a sat nav. It's going to tell me which way to go. Get down this road, down this road, turn left, turn right. It's the same with Forex. Yeah, you've got to start at some point. How do we get from that high to that low? Yeah, do we have to stop in the middle? Do we have to go, you know, not really left or right, but it may come back up? You know, can we get another sell in? Can we get another buy from there to there? Yeah, is there imbalance in the way? So we call imbalance or institution candles just roadblocks. Yeah, so we're just driving and driving and driving. If you get to that roadblock, can you turn around, maybe do a U-turn and then sell off it or buy off it, or can we jump that hurdle, jump that roadblock and go past it? And if you go past it, then obviously we're looking for the next roadblock. Where's the next institutional candle? So that's the only thing. And people overthink which institutional candle is it going to be. I would say 99, like I said earlier on, 99% of the time it's one or the other. You always have got two, and people struggle knowing which one it's going to be. You know, it's just pretty much break it down, break per from 4 hours to 2 hours to 1 hour, and just identify what is blocking each one. So if this one's got nothing and it's small, you know, yes, it does help if the body is bigger because it means there's more volume in there. But if this one is small and this one is big, but it's got a massive IPA hidden in front of it, that IPA is protecting that higher one. So I would go for the higher one. That's the only way you can pretty much go for, understand the difference between the institution candles. And I used to struggle a lot with that. But if you go for the first one, take the trade. What are you going to lose? 1%. As long as you're using risk management correctly, you're good. Because if that one fails, you go into the next one and you grow 7-8%. Fab. If you get 8%, you just lost 1%. You're up 7% on your account. So you take what, 2 or 3 trades a week, 7, 14, 21. You just grow your account 21%. Yeah. So as soon as you get it, then understand the concept, just go for a funded account. Then you're playing with stupid money. yeah, it's just daft money. But yeah, that's pretty much it. Unless, like I say, you've got any questions, I won't take too much of your
Thank you,
time.
mate.
Yeah, Jason. Thank you,
Adds
mate.
to the knowledge bank.
Yeah, it's like I say, it's a lot to take in, but I'll do this every week now, and then we can just go from there. I'll start as soon as you start to understand more of it. We'll start to chart markups, and we potentially take some trades on the Tuesday, Wednesday, and Thursday. But yeah, I'll put this on YouTube as well. If you, I understand it's very rumble. Is trying to. I need to try and lay it out maybe a bit better, try and explain it a bit better. But yeah, you can watch it back if you want to. It'll be on YouTube, which will be tonight or tomorrow. But yeah,
Cheers,
thanks for
mate.
jumping on.
I'll just see you next time if we can go through some. If I mark up some charts and then just maybe just review them with us and just see if
Yeah.
how I've got on with them and stuff. Just
Yeah, great.
out. Thank you, mate.
Right. Cheers, guys. Take care.
Cheers, mate.